Imagine a future where you no longer carry cash, not because you chose to stop, but because it quietly disappeared. Banknotes fade out, ATMs become rare, and everything you buy, from your coffee to your car, is paid with a digital currency issued by the government. Many countries are already heading in that direction. China has its digital yuan. The European Union is preparing the digital euro. And what about the United States? In 2025, the US finds itself at a crossroads. Not only is it not rushing into launching a central bank digital currency, it has in fact done the opposite. So what's happening with the digital dollar? Why is the US pulling back? And what does this mean for you, for the dollar, and for the future of money itself? Let's break it down. What is the digital dollar? A digital dollar is a concept for a central bank digital currency, a new type of money issued directly by the Federal Reserve, available to the public in digital form. Not crypto, not a stablecoin, but real US dollars, just fully digital. Think of it like electronic cash that you could store in a digital wallet with direct backing by the US government. Countries around the world have been working on their own versions of this. The idea is to modernize money, enable fast and cheap payments, and provide a public alternative to private banking systems and corporate-issued stablecoins. But here's the thing. In 2025, the United States officially said no. What changed? On January 18, 2025, President Donald Trump signed Executive Order 14178, titled Ensuring the Future of Digital Assets in America. This order prohibits any federal agency from creating, promoting, or implementing a central bank digital currency. Period. The reasoning? Concerns over financial surveillance, potential government overreach, and the risk of eliminating cash and personal freedom in transactions. Trump stated that a digital dollar would strip Americans of their privacy and give the federal government total control over every transaction. His administration positioned itself strongly against CBDCs, calling them a threat to liberty. Instead, the executive order explicitly encourages the development of private sector innovation, especially stablecoins, digital assets pegged to the dollar but issued by private entities. The Fed's position following the executive order, Federal Reserve Chair Jerome Powell made it clear, "As long as I am chair, the Fed will not pursue a digital dollar." This statement was not just symbolic. In early 2025, the Fed formally withdrew prior guidance that allowed banks to engage in certain crypto and tokenized dollar activities. It also paused internal research into CBDC design frameworks. This doesn't mean digital currencies are off the table entirely. It just means the US government is not taking the lead in issuing one, at least not right now. What are other countries doing? This US position is especially striking when you compare it to the global landscape. China. The digital yuan is already in pilot programs in dozens of cities. Millions of Chinese citizens have used it. It's integrated into apps, accepted by public transportation, and even used at the Olympics. European Union. The European Central Bank completed the investigation phase of its digital euro in 2023. The design phase is ongoing, and full launch is expected within a few years. India, Brazil, Nigeria, Sweden, all are either testing or implementing central bank digital currencies. So why is the US swimming against the current? The American perspective. There are several reasons behind the US reluctance. First, the dollar is already the world's reserve currency. It dominates global trade, commodities, and finance. There's no urgency for the US to reinvent the system it already controls. Second, Americans value financial privacy and decentralization more than most other countries. A government-issued digital currency raises immediate questions about surveillance, transaction limits, and programmable money. Third, the US prefers to leverage the private sector. Rather than launching a state-run digital dollar, the focus has shifted toward creating a regulatory framework for stablecoins, such as those issued by PayPal, Circle, or future players. And finally, the US is already modernizing its infrastructure through FedNow, a government-run instant payment system that launched in mid-2023. FedNow allows banks and financial institutions to settle payments in real time, 24/7, reducing the need for a CBDC to solve speed or efficiency problems. So what comes next? With the official rejection of the digital dollar, the US has sent a clear message. It will not follow the global rush toward central bank digital currencies, at least not in the current political climate. But this isn't the end of the story. Instead of a government-issued digital dollar, we're likely to see the rise of well-regulated stablecoins, pegged one to the US dollar. tokenized dollars issued by private banks and tech firms, faster payment rails like FedNow, replacing the need for traditional transfers. This approach keeps innovation in the hands of the private sector while still defending the dollar's dominance. The risks, of course, this decision has its critics. Some argue that if the US doesn't launch a digital dollar, it could fall behind China in setting global tech finance standards, lose influence in cross-border settlements, allow private companies too much control over money infrastructure. There are also concerns that without a CBDC, the US might eventually lose control of digital payments to foreign or corporate competitors. But for now, policymakers believe the risks of launching a CBDC outweigh the benefits. So where does that leave us in 2025? The US is going its own way. No digital dollar, no central bank-issued token. Instead, stablecoins, instant payments, and an open battlefield of ideas. This debate is far from over. If the global landscape shifts, if privacy concerns are solved, if demand changes, the US could pivot. But for now, the answer is simple. There is no digital dollar. And in America, that's exactly the point. Subscribe our channel for more videos every day.